Duncan, welcome. So good to hear your voice again. I was wondering how things are going there with the crisis and the self isolation.
Well, I've heard all these Zoom jokes. I'm trying to spread the meme. I'm in the Zoom where it happens, for those who watched Hamilton.
And previous to this, you were becoming a television star in Australia. I heard from you.
Yeah, I was sent down there, flown down to be the last episode of something called River Pitch. So the
Ah,
people behind Shark Tank Australia started River Pitch,
hmm.
and I was in the final episode, and they wanted some Mark Cuban type to make fun of the founders. But I liked all the founders. I was actually trying to be very encouraging and nice to them, so I probably didn't fit the
Ah,
model. But
yeah. You weren't an asshole enough.
exactly right. No, I think these people with their hearts into doing something, and I wanted to
Yeah,
try to give them a reasonably good advice. In
yeah,
some cases, it could have been go get a real job, but in other cases, they had some
yeah.
really interesting opportunities. So,
Oh, that's so great. Well, thanks for your contribution to the Aussie startup ecosystem. So, I was wondering if you want to just briefly tell me what your main focus is on investments and how that is affecting what's happening at the moment.
well, Bullpen Capital is post seed. Our whole strategy is after a seed round, we will do a top off round, so to speak. It might be 3 to 5 million to
Hmm.
try to set up an A round. Now, the thinking here is the A rounds today are B rounds of 10 years ago. So
Right.
the stats are actually clear. A round 10 years ago was 5 million, B round is 15. Today, the seed rounds in toto are 5 million and the A rounds are 15. So everything shifted out one more level. So our insight was, given that phenomenon, how do you set up a $15 million round? Why play for 5 or 7 when you could play for 15? So that's how Bullpen was started.
Right. And how is the current crisis affecting your investments at the moment?
There's a huge irony here. We started Bullpen as a bear market fund because
Right.
we started thinking of it '09 and 10. And so the theory of post seed is you come in, you're almost like a value investor. You get a very good value when you're doing something essential. You roll your sleeves up to really help the company. We do a lot of hands on work with the founders, and you get the big A. Well, it turns out that's a bear market strategy. In a bear market, valuations drop. The sieve to get to the next round is much finer. Fewer people make it. The companies need a lot more help how to handle a downturn and how to restructure a company. So we do all that.
So it's sort of perfect for what's happening now, right?
It fell into our laps. We were kind of surprised. We went through our whole portfolio before the crisis hit. Actually, we started doing it early March.
Wow.
We
That's
first
good
looked at
thinking.
reserves, and we did triage, and then when the crisis hit, we were good to go.
How amazing. That's like so forward thinking of you guys.
There's an article in Business Insider, actually 3 parts, where I explained this whole process. But the key to it is to create something we call a default alive plan,
Okay.
where you cut back enough, you change what you do, you pull back on your ambitions, but you get to positive cash flow, or you get out far enough with enough metrics, you get to the next round. In a bull market, everything's momentum. Okay, we did a really, really high price seed round. Let's get a high priced A round. In a bear market, it turns on its head. We were surprised how resilient our portfolio was. Many, many more companies could follow a default alive plan than we had thought. But that's kind of a side light of doing post seed in a bull market. You're still
Right.
trying to be very cash conscious. You don't want companies that have raised too much money. You want the
Yeah.
burn rate to be relatively lean. And when you do all that, the companies turn out to be resilient.
That's fantastic and so reassuring. Do you envision investing this year as you would have last year or your expectation of this year before the crisis came?
Well, we've been investing at a pace of roughly one a month, and maybe
Okay.
you lose December because it's December, and you lose July, August because you're on vacation.
Yeah.
But 10 to 12 a year has been our pace.
Okay.
We slowed down a bit in part to see how the crisis would shake out, but we just put a term sheet out. So we might have missed 1 month. We might have missed April, maybe
Okay.
2 months when the dust settles. And
Yeah.
we're planning to keep on going at about one a month until the end of our current fund, Fund 4. And then we'll flip over to Fund 5.
Well, that's good work, you guys. And what do you think as far as the overall investing in Silicon Valley at the moment? Do you think that investors are continuing on as they have done and as their expectation was, or do you think that they, like you, have sort of slowed down to see what's going to happen?
Well, almost every VC publicly says we're still in business, but almost no VCs were doing new deals. They were sort of filling out the deals that had already been in their pipeline.
Uh,
But having said that, there are still other people more aggressive than we are that have been doing a fully remote deal and talking about it, meaning
okay.
they never meet the team. It's all
Yeah.
on Zoom, a
Yeah.
Zoom deal. So there's some VCs are still out there, but I would conjecture that the data will show that the pace has dropped to about half what it used to be.
Huh. And do you think that doing remote or virtual introductions to companies and seeing the potential, do you think that's viable and doable now moving forward? Because a lot of investors that I've spoken to already have said that that basically that's what it's looking like, more of a virtual environment as regards investment.
Well, I think we're thinking, like in California, we will start phase 2, phase 3. I would say by July 4th, Independence Day, we are potentially back to normal. I say potentially because human behavior might say skittish for a while. I'll
Yeah.
just give you an analogy. I was here in '89 when the earthquake hit, the big one,
Oh, okay.
right at the start of the Oakland A's San Francisco Giants World Series game, which is funny to think about.
Yeah.
And I remember I worked in a high rise in San Francisco, and
Right.
every time the elevator would go by and the floor would kind of jiggle over on a high floor, we'd all look at each other like, "Is this another one?" And it took about a year for that little sort of ticklish sense in the back of your head, "Oh my God," to go away, and then it went
Oh,
away. So
oh,
I think
okay.
what's going to happen here is, as of July 4th or July, we
Right.
could go back to normal, but we probably won't. We'll still kind of be skittish, and it may take another year before, or 9 months, before people feel really comfortable going back to the way it used to be. In
Well,
either
you've got,
case, the
yeah,
consequence is the venture industry has to learn how to invest remotely without meeting the team.
yeah, yeah. And you've got a very positive take on it because I know I just posted an article this morning that China has quarantined 108 million people because there's been another outbreak there. So, and a lot of the VCs I've been speaking to have said that, they're not going to travel, that they'll be doing a lot of work remotely. Um, that the risk is just too great until they find a cure for this virus.
Yeah, I can't. Who can project that? I
Okay.
think both sides have a reasonable viewpoint.
Okay.
It just, we're not going to keep the whole economy bottled up until we have a vaccine. That is foolish thinking.
Yeah.
It
It'd
may
be
never be a vaccine.
impossible.
There's not.
Yeah.
Vaccines are hard,
Yeah.
and the
Yeah.
viruses are clever. They're
Yeah.
agile. They mutate. But
They have a better survival rate than us humans.
yeah, they do. But we're already seeing a lot of people around the country rebelling against the lockdown and filing
Yes.
lawsuits, and the lockdown is already breaking down. So I think on the one hand, the lockdown itself will go away by July 4th. But on the other hand,
Okay.
as I said, people will behave more cautiously. That
Yes.
skittishness.
That makes
And
sense.
yeah, so that'll continue. So then the question is, can you really do venture with fully remote? You would think at some point in the food chain, somebody's got to meet the team. Now, it may
Yeah.
be post seed is kind of an interesting stage in that we always look for certain markers like good investors before us. And
Okay.
by good, not necessarily brand name, but we know them well enough to know they've done their homework on the deal.
Got it.
And that gives you comfort. But if you have a deal that comes in, there's nobody's done sort of that check, well, you probably have to be the fund to do that check. And whether you're wearing masks or not, meet the people.
Yeah. Okay. tentatively. And what would your advice to startups at the moment who are looking for funding be?
That's a great question. I thought a lot about that question before this call because this is the most important part of the call.
Yeah.
And they're all going to hear things like some of the greatest companies started in a downturn, which is true.
Yeah.
Um,
Yeah.
but let's take a look. Let me give you a context. This isn't like 2000 when the bubble burst, and I was there. When the bubble
Yeah.
burst in 2000, people had doubts about the internet. It sounds crazy today, but the internet's not real. So I think people felt about the internet in 2001 like we feel about blockchain today.
Got it.
Didn't feel real. But of course, it was huge, bigger than anybody
Yeah.
imagined.
Yeah. It
And so there
changed
were
our lives.
doubts about the whole market, and that made people slow to invest. In 2008, we thought the financial system would melt down. The doubts were about that, not technology.
Right.
In this time, nobody has any real doubts about the value of the technology. In fact, if you look at the S&P, the FANGs, sometimes called FAMGAs, are the only stocks driving the whole growth in that stock market. Tech is the only sector now producing real alpha in the marketplace. So there's
Interesting.
not just no doubt that it's real, it's actually where the money wants to go. Totally different than in 2000 and 2008.
Got it.
So as a consequence of that, I think we're going to see a unique pattern here. I sometimes try to call it a square root sign. Everybody's got a letter, right? A V, a U, a W, some crazy letter. Somebody came up with swoosh, like a Nike swoosh. But I call it a square root sign. A
Okay.
sharp drop, look at the sign, sharp drop, and then a V recovery, but
Yeah.
not all the way. And then a slower, sort of flat period for about 9 months so we get back to where we were.
Okay.
Whatever, if you can visualize it, maybe it's it's not a letter. I just want to pick something that wasn't a letter.
Yeah. Yeah. Yeah.
So
I can visualize it.
and I think the bounce is going to happen pretty quickly. For example, in China, the biggest bounce right away were cars. Why? Nobody in China wants to commute on a railroad anymore or a
Yeah.
bus. They're all buying cars like crazy. I think the auto industry might do very well over the next 3 or 4 months.
Hmm.
We have to decide whether we're commuting or not. A lot of people can work remotely, but
Yeah.
those that are commuting will probably buy us to drive the car and then take a train. So cars may bounce. Things like that will create the bottom of the V. For
Right.
the venture side, I think what this means is for startups, you're probably got a 2-quarter reset we're living through, and then things will begin to get interesting. So let me explain that in more detail.
Yeah, please.
You want to be, let's say you're a SaaS company and the rules are triple, triple, double, double.
Yep.
Grow by 3, basically get to 10 million ARR in 2 years. That's a triple, triple, and then go 20, 40, 60 or 80, 70. So grow like that coming out of the 10 million-ish range ARR. Triple, triple, double, double, double. All right. It's hard to triple when everything fell apart. So those companies get a 1 or 2 quarter reset. If you survive this next 2 quarters, if you grow 1x, 2x, it's okay. Nobody's going to hold it against you. It's how you come out of it that matters. So you get like a reset for 2 quarters. Now, for startups, if you're already in the market, I'll give you some advice. If you're not in the market, I'll give you other advice. If you're in the market, this is the greatest thing for you in your time as a startup, because the reset means you can now do the company you should have done. Most founders figure out things they would have done differently, things they would have added, but they get caught up in the rush to get to the next round to get venture money and the expectations of venture people. So they sub-optimize the real opportunity. You have a chance to reset. Take it. Really think through what you should have done and do it. And you got 2 quarters to build the technology and get poised to do it. This is a freedom you never get. Some
Yeah.
companies got it in 2008 and took advantage of it. You've got that reset card, play it. Okay? And then the VCs
Fantastic.
will judge you on how you come out of it, how
Yeah.
fast you grow coming out of the reset, not how you grew during the reset.
Yeah. And if they're not in the market, what's your advice?
Well, what's happening now is kind of a triage across the whole ecosystem. So The really hot companies, especially ones like Zoom that are surging in the COVID world, are everybody wants to put money in. And then the pretty good companies, some may not be surging, but they have very solid businesses, people put money in. The ones I'll call flyers, not quite the top tier, not even the middle tier, but interesting, forget them. They're not going to get funded. So it's like the top companies get a lot of money. The ones in the middle still get funded. The bottom third, forget about it. Bottom half, forget about it. So the number of startups that get funded, I think, is going to shrink. I think it already is halved. It may expand a bit in Q4, Q1, but it's not going to expand to where it was. So the sieve to get through, to be one of those startups, to get the money is now much harder. Okay? Right. Now, is this bad news? Not really. If you look at the most startups, they're derivative. There's some tweak on an idea somebody else has. So if you haven't started a company, use the reset time to think through a bolder, more ambitious, more groundbreaking idea. It's easy to say that, but people tend not to do that. They tend to do derivative products that are tweaked here, tweaked there, 10% better. No, go for 100% better. This is your chance.
Yeah. Real opportunity for sure, as well as the challenges. And
let me give you a concrete example.
Okay.
Remote work is fascinating, remote education, everybody gets that.
Yeah.
How do you manage remote workers? Well, you can have dashboards and things like that, but dashboards are historical data. They're not real time. Right. Wouldn't you rather have a real-time console? You're the sales manager. You know immediately what meetings are being set up. It's all remote. Who's talking to whom, who's in their funnel, who's scheduled, who isn't scheduled, how did the meeting go? You've got all this at your fingertips. Right. So across the world of remote work, remote education, remote this and that, think about the remote console to manage for the manager level. Because if the future is remote, then the future supervisors, managers are going to live in a console. And that's how they're going to manage. They can't walk down the floor.
Yeah.
So take that type of thinking and apply it to other markets. That's just a particularly obvious one, I think, but a lot of people haven't thought it through that way. They still want to do analytics in a dashboard. No, do a console that's real time and let people manage their far-flung workforce that way.
Fantastic. Great advice. And personally, Duncan, what have you taken out of this crisis? Obviously, we've all had a lot of time to reflect and not be distracted by the noise out there.
Well, I've taken two big lessons out of this. So one is, these are sort of prediction type of lessons. Yep. I think the trends are just accelerating, but everything I've spoken about has really been a trend that was already occurring.
Okay.
Like the number of startups peaked in 2015. It's been going downhill ever since. It's just going to accelerate. Yeah. Money's rotating to the later stage mega rounds. That'll accelerate and so forth. So the first thing is, assume you get 2 quarters of a reset and then an acceleration of prior trends. But here's the other thing that's going on. The boom we were in, which really started with the iPhone, let's say it got going in 2010, 2011, is mature. It matured several years ago. How many new iPhone apps have people gotten excited about? Not very many. Yeah. It's a mature boom. And one thing COVID is going to do is accelerate the next boom. If you think about it, everybody's still doing startups in the old phase. It kind of clogs up the pipeline for the new stuff. They don't get looked at. They're not thought of as interesting. When you sort of clean out the pipeline, you open up VC vision to what's the new stuff, truly new.
Yeah.
And a lot of people say the next big wave is the so-called fourth industrial revolution. Highfalutin words. If it's true, it's going to be huge. It's going to be bigger than what we just went through. It'll be more like what happened in the 90s than what happened in the teens. So I happen to believe they're right, whether it's the fourth industrial revolution or some other name, doesn't matter.
Okay.
But this is self-driving things, AI-empowered things, robotics. But I'll put a more general word on it. It's the reindustrialization of the Western world. We're going to reindustrialize. And the world's going to look so different. I mean, if we have all these cars commuting and then they become self-driving, man, you free up a lot of time that's now stuck in a traffic jam.
Yeah.
If we have more like micro mobility devices that are electric and more pleasant and they're not spewing out fumes and all that, it's going to be a better world. I can go down through a whole list of stuff, but I think the world is going to move quicker to the next range of deals to do. So the other advice is think through what this reindustrialization of the Western world means. And there'll be a terrific number of opportunities there that are simply not visible today because we're all thinking of Uber and iPhones and apps and cloud and stuff of the past boom, not the future boom.
Wow. Thank you so much. You always educate me, Duncan, when we speak, and I really appreciate it. And I'm sure all the listeners will too. Thank you so much for your time today, and wishing you and your family all the best until this crisis sort of finishes.
Yeah, look, and thank you very much. And I love what you do, and I'm so glad to be part of it. So just whenever you need me to do one of these things, just let me know.
You're very kind. Thanks again, and stay safe and well.
Take care. Bye.
See ya. Bye.